Hi everyone, my name is Yana and I'm going to represent you an incremental analysis about decisions to eliminate unprofitable business segments. Management sometimes must consider whether to eliminate a division or segment if it is not profitable. The decisions are called keep or drop or continue or discontinue decisions. Manager must consider which costs and benefits would change as a result of the decision. Before deciding to eliminate a product line, one needs to ask the following questions. What costs and revenues would change as a result of the decision? Would the costs and revenues of other product lines be affected by the decision? Are there alternative uses for the resources currently devoted to a product line? Opportunity costs. If you want to find out what will happen if you eliminate a particular product, compare two contribution margin income statements. One that assumes that you continue with the product and one that assumes that you drop it. The first example. The Great Soda Corporation is thinking about discontinuing a soft drink line called Fizzy. The company expects to be able to sell just 1,200 cases of Fizzy this year at a price of $10 per case. The cost of making Fizzy is shown here. Note that fixed costs here are unavoidable, which means that total fixed costs will be the same whether the or not Fizzy soft drink line is discontinued. Continuing to make Fizzy means the Great Soda Corporation loses $3,000. However, eliminating the Fizzy causes the company to lose $5,000. When it comes to profitability, it is a no-win situation. Eliminating Fizzy increases losses by $2,000, so the smart decision for the great corporation to keep making Fizzy. The conclusion is that even a segment may be unprofitable, it is maybe contributing to the overall income of the company. These and other factors should be considered before discontinuing the segment. The next example. Assume the same facts as above, except now assume that $2,000 of the fixed costs instead of $5,000 in the previous example attributed to the fixed line can be eliminated if the line is discontinued. In this case, because the company is able to eliminate of its costs by eliminating the division, it can increase its net income by $1,000. This occurs because $3,000 saving that result from eliminating fixed costs exceed the $2,000 in loss of contribution margin. As a result, an important purpose of management accounting is to provide managers with relevant information for decision making.